Peter, we have quite a lot of questions. First of all, it's the debt ceiling that will come back at the forefront, this U.S. tax issue, and of course, everything that happens with Delta. What do you think will be the biggest movers for U.S. assets?
Well, I think at the moment it's digesting the proposed tax measures. So we're probably at extreme anxiety over that. You know, naturally, these are going to get cut down as negotiations to implement those take place. I think it is often underestimated, the importance of the debt ceiling. I know that analytically it's something of a pedantic thing to look at. You know, it's just this administrative encumbrance that we have to deal with. But frankly, if it puts upward pressure on short-end rates, then it has the potential to destabilise US risk assets. And that's another reason that there has been, I think, just a bit of a renewed recognition that US risk assets are quite heavily, strongly valued. Well, we would say overvalued compared to our fair value metrics. And so this is another risk factor for the month of October, which would also threaten to take some of the froth out of those valuations. And I think those are the main things. But we would look at these risks as being something which are going to be softened by the inflation pressures starting to show that they're topping out.
Peter, where does that leave you then in terms of your regional preference for equities?
Our regional preference is very clear that if you want to maintain equity exposure, then you do that in Japan. That's the clear outperformer in our metrics. And for the cyclical exposure in Europe. So the US equity exposure is unattractive on a relative basis in our view, and also outright. We think the US has basically priced in all of the upside of next year as well. So when you add in some of the uncertainties of the risk factors you brought up, then it doesn't look like good risk reward at the moment. It's better to allocate to Japan and to Europe.
Peter, hold that thought, because we just had a little bit of breaking news from Valneva. Now, Valneva is basically a French drug maker that developed also a vaccine against COVID-19. The UK has scrapped a deal to purchase some of the vaccines from Valneva. And Valneva at the moment, I think we have that stock price up. We have the S&P futures. We'll get Valneva in a second. Those shares plunging 45% in the last couple of minutes. So you can see 45% decrease. I mean, this is one of the biggest stories, right? If you're a small biotech company and you're doing some of these vaccines and suddenly you get a huge contract pulled or you don't get it, this is kind of, you know, what happens.
And if you don't have a diversified portfolio, if you're overly dependent on that one particular drug or that one particular contract. And these are all changing in terms of supply chains around the vaccine. We've seen other countries like New Zealand and Australia getting additional supplies from Europe, for example, where there's an excess. Francine?
Yeah, and Valneva, I mean, last year, I think the UK agreed to buy 100 million doses, and suddenly they say no more. So, Peter, you know, I don't know whether it's too risky at the moment to buy into some of these smaller biotech companies, or we've seen also the Modernas of these world suddenly increasing significantly, but actually concerns about the future. I mean, do you look at that space at all, or do you just have to be a virologist actually to be able to invest in there properly?
No, we have experts in that space. More from my perspective, I would say that a lot of the themes which have done so well during the pandemic now still look like they have room to be faded. We think that Q4 is going to be another quarter where cyclicals do very well. It's really because growth in Europe is still going to be running very, very high, and into next year growth is going to be running very high. So coming out of some of the defensive sectors and being exposed into some of the more traditional cyclical sectors still has value in our view, and also means that one is kind of a soft long of the market rather than having explicit credit spread exposure or indeed equity upside or downside exposure. So we like the rotation into cyclicals against this backdrop of still elevated inflation and very strong growth data, even though the growth is starting to decelerate.